The recession is widely predicted by analysts, economists, and other specialists for 2023, but it could drag on for several years. Those who have paid attention to the predictions of specialists, analysts, and economists will know that a recession is likely to hit the U.S. economy either in the next year or in 2024. The depth of the recession is a mystery. Investors are in uncharted waters after 4 consecutive 0.75 percentage point interest rate hikes from the Federal Reserve. This is particularly true given the Fed's ongoing reduction of its massive balance sheet. This is why Warren Buffett's wisdom might end up saving you a lot of cash. In the 7 decades since its founding, Warren Buffett's Berkshire Hathaway has consistently outperformed the market. He has the experience of having weathered a few economic downturns, something that many individual investors lack. To succeed in the long run, you need to plan ahead and put your money into good investments. Recessions, like everything else in the stock market, are difficult to predict. It's also possible that a recession may occur and go unrecognized until it's already far into or past its trough. It's not uncommon to experience a recession once every 10 years, which is more often than you may imagine. Therefore, if you are investing for the long term, you should anticipate experiencing a recession at some point. Buffett has always cautioned investors to look at the big picture, arguing that short-term volatility and financial difficulties are par for the course. An investment in a firm with solid fundamentals is likely to pay off handsomely within 5 to 10 years. This, however, does not negate the benefits of putting your money into smart assets. Productive assets, like farms and real estate, are real and generate a lot of income, which appeals to Buffett. Warren Buffett has also emphasized the need to not complicate matters for oneself. Most investors may get by with only purchasing an index fund that tracks the S&P 500, which has a track record of long-term success. While some of Buffett's advice is more cautious, he has always advised investors to keep an eye out for opportunities during downturns. To paraphrase the Oracle of Omaha, be greedy when others are terrified and fearful when others are greedy. Recessions are usually temporary, and they are always followed by new market highs. Therefore, his counsel is also sound. During economic downturns, investors have the unique opportunity to purchase equities at historically low prices. If done at the correct moment, these investments will provide positive results. For the most part, Buffett has followed his own advice. Berkshire Hathaway, for instance, has the second largest position in Bank of America out of all the companies in its massive share portfolio. In 2011, Buffett made his first investment in what has since become the second biggest bank in the United States. Berkshire was able to acquire hundreds of millions of shares of Bank of America ordinary stock at a price of $7.14 per share after purchasing $5 billion worth of preference shares and stock warrants. Here we are in the present. Bank of America stock is still worth more than $32 after a roughly 30% decline this year. Though it may be difficult, strive to maintain your composure in the face of an impending recession, as advised by Buffett. Even if a company you've studied extensively and feel confident in has fallen significantly this year, you should hold on to it if you've found positive signs in your own analysis. It's quite likely to return. Feel free to take risks if you have some money to invest and find promising prospects. Likewise, if you find yourself in over your head, don't be too proud to confess it. Invest in index funds rather than picking individual stocks. You may expect them to be useful along the road. Last but not least, remember that recessions, although painful at the time, have always been temporary and have always been followed by new market highs. Don't lose hope and don't give up. Investors love bad news because it drives up the price of stocks. He wrote in 2008, "It lets you purchase a piece of America's future at a bargain," for the New York Times. And in his 2016 letter to shareholders, Buffett predicted that gloomy economic conditions would bring temporary gold showers. There are 2 things you should always keep in mind, especially in perilous situations. To begin, if you're an investor, fear is your friend since it motivates you to seek out bargains. The second thing is that your worst opponent is really yourself. Equally wrong is the outcome. Also, in the same letter from 2016, he said, "Investors will almost certainly perform well if they avoid expensive and needless fees and merely sit with a group of big, conservatively financed American enterprises for a long time." Buffett said in an editorial for the New York Times, "Yes, companies will see drops in profits, as they always have. However, in 5, 10, and 20 years, most large corporations will be more prosperous. To know whether, when, and for how long a recession would occur, one would need a crystal ball, which we do not possess. A look back at history, however, reveals that economic conditions eventually improve." And he said, "I believe the smartest thing for most people to do is to purchase the S&P 500 index fund." At his first virtual shareholder meeting in 2020, many people will spend a lot of money on the guidance they don't actually need. Treasury securities are an excellent long-term investment for anyone willing to bet on America for the foreseeable future. S&P 500 investors have earned an average yearly return of 11.88% since 1957. Farms, real estate, and profitable enterprises are all good investments that provide high returns. In his 2021 annual letter to shareholders, Buffett predicted that the vast majority of investors in such assets would ultimately see a positive return on their investment. In a letter dated 2021, Buffett emphasized the need for patience after the purchase of productive assets. As Buffett puts it, all you need is time, inner tranquility, a wide range of assets, and as few transactions and costs as feasible. The greatest thing you can do is to be really excellent at something, Buffett stated during Berkshire Hathaway's 2022 annual shareholders meeting. Those who benefit from your generosity will likely share part of their earnings with you in return. Skills, he says, are more stable than currency because they retain their worth even in bad times. The things you create yourself are the finest investments since they are not taxed, according to Buffett. While speaking to CNBC in 2021, Buffett reflected on the lessons he had learned from the epidemic. "The general public has a lot less knowledge than they give themselves credit for, I've discovered. But the most important thing you learn is that the pandemic has to come and that this isn't even the worst one you can imagine," Buffett added. As the saying goes, society has a hard time being ready for things that are far away but might happen and will eventually happen. Recessions, likewise, do not continue forever, which is an additional consideration to make. The state of the economy has not improved. When the NBR announced in 2010 that the recession had ended in June 2009, Buffett said, "We're not going to be out of it for a long, but we will get out." Warren Buffett has said that he considers a recession to be finished when real GDP per person reaches pre-recession levels. "It's not about picking the best firm," he told CNBC. "It's about buying all the large companies in the S&P 500 on a continuous basis at a cheap price. Never believe the hype that you are a stock market expert." Buffett often extols the virtues of low-cost index funds and urges investors to be vigilant about costs. For Buffett, expenses are a major factor in determining investing success, as he recently told CNBC. "How much money you have in retirement is drastically affected by factors such as whether your returns are 7 or 8% and you pay 1% in fees. We know from history that an unmanaged index fund will do well in the long run and that active investment, on average, will not." If you love this video, subscribe, leave a like, and watch this one too.